Hello, welcome to the Real Estate Market Watch. I'm Bob Gibbs, and this is video 2 of our video series, How to Find, Secure, and Close on Property. Video 2 has to do with the pre-approval process. Video 1 talked about motivation, which, as I mentioned in that video, is ultimately the most important thing going into this. Pre-approval is also very important though, and the reason pre-approval is important, there's actually several reasons. Probably the first and foremost reason that it has such a high level of importance is, I'll put it to you in terms of a story. Let's just say, for instance, you feel motivated and compelled, and you've gone through the process of understanding why you want to buy a home. So you go out and look. You start getting onto one of these online home search lines, and they start sending you properties, and you see stuff you like, and you go out there, you take a look at it, and maybe go into an open house or call an agent and say, can you show me these homes? And they say yes. You go out and take a look at it, and you're assuming you can afford a certain amount of money, and you find your dream home. It's just what you want. So you say, I want to put an offer in. First thing that they ask is, well, have you been pre-approved or pre-qualified? Or pre-approved is actually the right term. If you say no, okay, so we need to go through that process first. Okay, now keep in mind, you've already found your dream home, and your mind has said, I'm going to have this house. Go through the pre-approval process, and I'm telling you, this whole stuff happens all the time. That after you go through that process, it turns out that instead of being able to afford that $800,000 dream home that you found, you may be looking at more of a $500,000 home, and you can't get there from here. So, better for you to know what you can afford going in. So pre-approval in that sense is very, very important. What it takes to get a pre-approval, typically you need to get with a lender, either a bank, a mortgage broker, someone who's does loans for a living, and they're going to ask you for probably 2 years of 2 years of tax returns, last couple of months of W-2s, couple of months of bank statements. What they're trying to determine is, first, how much income you make, and then what your debt burden is. So, you know, you have a debt that you have, either credit cards, car loans, whatever, and they want to determine the difference between what you owe and what you're paying every month and what you make. And within that amount is really what the home loan is going to come out of. So that's going to be very critical in determining how much of a loan that you can get. The other thing they're going to check is your credit scores. Now, things have changed a lot lately, and the banks have gotten a lot more strict on lending money, and so they're actually requiring credit scores to be higher than they used to. However, there are programs out there for people who don't have the highest credit scores on the planet. There's FHA loans, things like that. But in this current environment and in the markets we're in now, having a good credit score is a good thing to do. Get you a lower interest rate. It's easier getting a loan. It's just good. So anyway, they're going to run your credit score. And then what happens is they're going to process all that and kind of come up with, this is a range. Okay, you could probably go up and afford this much in a loan given this much down payment. And they'll give you some options. You know, you go a conventional loan, you can put more down, get lower interest rate, you can buy down points. That's where having a good loan broker comes into play, and you can always contact me and I can give you references to really good ones. Then what they're doing, if they're really doing a good job, is they'll actually run your credit application and your loan application through an underwriting department at a bank. An underwriting department is that group who actually decides whether or not they're going to fund a loan. I mean, they're the ones at the bank. They're not a loan broker. They work at a bank who's going to actually be funding the loan. They'll look at your information and say, yes, this is a person that we can give a loan to of X amount. And then once you have that, then you're kind of armed to start the looking process and decide how much home you're going to look for. Second thing that pre-approval is important for is when you go to put an offer in, you're going to have to provide a letter from the lender saying you're pre-approved to and you could afford this home. If you put an offer in without a pre-approval letter, they won't even look at it. They'll just reject it. So you need to have that to begin with. You need to have it to start your home looking process. I wouldn't even advise looking at houses really until you have that. Because if you start looking at stuff that's more expensive than you can afford, you may be discouraged having to kind of ratchet down a little bit. So pre-approval process, very important. I kind of went over it at a high level, but always feel free to give me a call and we can go over it then. See you on the next video. Bye.